Hello everyone and welcome to the YouTube channel of BeingACCA. In this video, we are going to be solving the very first case study question from your section B of the PM Pre-September 2024 mock exam. Let's get started. The first question is Jarda company. So here you can find the question as well as the requirement in front of you. So with just the looks of the question, I'm able to tell that this is a variances question. You see the very first question requiring you to calculate a variance. So let's have a read at the entire question first and then we'll see the requirement again. So Jarda Company is a business that produces high-quality acoustic guitars. They offer three models, the student, performer, and the master, which meets the needs of beginner to professional musicians. Jarda Company prides itself on the high quality of its workmanship and only uses the best raw materials. The sales manager at Jarda is responsible for marketing and selling all three models, and the production manager is responsible for all aspects of production and quality. The procurement manager is responsible for purchasing raw materials and managing supplier relationships. The company operates in a JIT environment and holds little or no inventory. Budgeted and actual information for the previous quarter are as follows. So we are given the financials. Additional information from the cost card about the use of spruce, a particular type of wood, for the student model, and actual results for the previous quarter were as follows. Spruce, the standard cost, actual quantity, actual spent, meter square stands for square meters. The procurement manager has been informed he will not receive a bonus for the quarter. He thinks this is unfair because the cost of spruce increased by 2% due to inflation. Now let's have a read at the requirement. The requirement wants us to calculate the total sales mix contribution variance. So let's get to the workings. The very first thing that we're going to need is the contribution that we are able to generate from each of the products. So for your student, performer, and master, the contributions are nothing but your selling prices minus the variable cost. So the selling price is given to us as 175 minus 120 as the variable cost. So 55 is the contribution, 490 minus 280. And then for the next one, it's going to be 700 minus 380. So this is our contribution per unit of each of these models. Now, the next thing that we require is the actual quantity that we have sold in the actual mix. Basically, the sales mix contribution wants to have a look at how much have we sold of the, if we have changed the mix, then how much have we sold more of the one which gives us more contribution, or have we sold less of the one which gives us more contribution or less contribution. So we just want to have a look at the contribution which has been changed because of the different mix. So originally we have sold, as per the actuals, we have sold so this is our actual quantity in the actual mix. So we have sold 516, 215 and 129. So the total of them is going to be the sum. So this is 860 right in front of you. Now this needs to be converted to the actual, actual quantity in the budgeted mix. So AQ in the BM. So the total is going to remain the same, which is 860. Now this needs to be divided in the standard budget ratio. So as per us, the ratio is 410, 246 and 164. So how much does it add to 410, 246? 164. So this is the total, and then we'll divide it in the ratios. So out of 820, it should be 410 of the first item. So this needs to be done in the ratio of 860. Similarly, next one is supposed to be 246 divided by the total multiplied by the actual quantity. And then last but not the least, we have 164 divided by the total multiplied by the desired actual quantity. So this is how much we should have sold according to the budgeted mix. So now let's work out the difference. So the difference that we find is nothing but this figure which you have actually sold versus what you have sold. So you are selling 86 more, so it's a favorable. variance. Similarly, you can drag and drop to the other ones also. Now, because these are negative, these are adverse. And again, the logic is that you should have sold 258, but you've sold 215, so you've sold lesser of these. Now, contribution you've already worked out, so your variance is going to be the difference multiplied by your contribution. Similar, you can drag to the remainder of the cells and then use alt equal for the total. So you get 18060 adverse as your final answer. So this is your answer. Moving ahead to the next question, we are required to calculate the sales quantity contribution variance. So contributions we already have worked out over here. Now for the sales quantity contribution, we take this figure. It's going to be very easy for you in the actual exam because you will be having the pen paper for your calculations. So this is, I have copy pasted the contribution and the actual quantity in the budgeted mix for us. Now we have to compare it with how much we should have sold according to our original budget. So original budget, these are the units, budgeted quantity in our budgeted mix. So this should have been 410, 246 and 164. This is what we should have sold and the total of them is this figure, 820. So let's now find out the difference. What we should have sold versus what we have sold. So 20 favorable. Similarly, now over here, the difference, these two should tally. Whatever you're getting as a difference, so it's coming 40. Similarly, it should be 40 if you take this one also. So that would mean that you have done the calculations correctly. Now we multiply the difference with the contribution. All of these are favorable. So we will just find out the favorable variance now. So it's going to be the difference multiplied by the contribution. And then the sum of them is 6180 favorable. Moving forward to the next question. Now here we have to indicate whether each of the following statements regarding the student model are true or false. So let's read the statement. The first statement says the procurement manager correctly asserts that inflation was the only cause of the overspending on Spruce. So let's have a look at the calculations. So this regarding Spruce, we are given with the details over here. According to the standard, the cost should be $285 per meter square. Actually, he has spent, let's see how much he has spent. He has spent 39,800 for 133. So that means per meter square, he spent 299. So the inflated amount, he's saying that the inflation was of 2%. So if I adjust it for 2% inflation, it should have been 290.7. But still this figure is a higher figure. That means he is not correct. Even after applying the inflation, still he has overspent. So this statement is false. Second statement is that the production manager used less spruce than expected. So let's read how much is required. So 0.8 meter square is required in per unit. And the actual usage is 133. Let's see how much we should have used. So the spruce is used for the student model. How much have we actually produced for the student model? We have made 516 units. So equals 516 multiplied by, according to the standards, 0.8 we should be taking. So we should have taken 144 and we have actually taken less. So that's what the statement is also saying, has used less spruce than expected. So the statement is true. Moving forward to the second last question. In the following quarter, Jarda company's flexed budget for contribution was 17250 higher than the original budget. Also, a 12150 adverse sales mix variance resulted from selling a smaller percentage of the master model than planned. So you have to tell what's the favorable sales quantity contribution variance. So we know that the sales volume variance is equal to the sales mix variance plus the sales quantity variance. So these are the two components that you have as far as the sales volume variance is concerned. So you are given with the sales mix variance of which is adverse of 12150, and you have also been given that 17250 is the contribution which was higher than the original budget. So that means 17250 is equal to the adverse that you have, negative 12150, plus the favorable variance which you have as the sales quantity, which is the requirement also. So how are you going to calculate for the quantity variance? This is in negative over here. So once it goes there, it's going to get added to it. So 17250 taken to your left hand side becomes plus 12150. So answer becomes 29,400 favorable. Moving further, this is the last question pertaining to this scenario. Also in the following quarter, the market for acoustic guitars increased by 4% and Jarda company held a bigger position in the market. Sales manager said that this was due to the promotion of their high quality production, which attracted new customers. Number one, he's saying, based on the above information, which of the following statements are true? Number one, promotion of Jarda company's high quality production is likely a cause of their favorable market size variance. Now, this statement is incorrect because market size is nothing but a planning variance, and planning variances depend upon the external factors. It's not on your internal factors. So this cannot be true. Moving to the second statement, favorable market share variance can be attributed to the actions of the sales manager. This is absolutely correct because the market share variance is the operational variance and it is linked to what the company has in their control. That means it's in the control of the sales manager. So if it is favorable, then it's definitely something which the sales manager has done well. So 2 only is going to be our answer over here. With this, we are done with this question pertaining to Jarda company. In the next video, we are going to answer the other questions. Thank you so much for watching. I hope that this was useful.